Good day, traders. What's going on? This is Prof from Benko Forex Academy again. I'm excited, guys. I'm very excited. We are here. We want to look at a completely new volatility index that we have never analyzed together. We want to dissect this index, its price action, and see where it has been and where we can expect it to go. Then we can also put it on our watch list so that we trade it on a daily basis before we go into business of the day. Don't forget to hit that subscribe button. Remember to subscribe, guys. Remember to subscribe. Also hit the notification button so that you don't miss anything that will be uploading here. Remember about that 1000 peg. Remember about that. Remember, guys. Okay, without wasting your time, let's go into V10s and talk about it and see where it has been and where we are expecting it to go. So for me, guys, the last time I had interest in V10s was on this day, which is June 16. I had last looked at V10s on June 16 this year, and it was because of my friend in Cameroon who had asked me to look at this and give my perspective as to where I was expecting V10s to go, because he's a good friend of mine and a new friend, and we share the same sentiments and the same troubles. I just thought, well, let me help a brother out, and I gave him this analysis, and we can start looking at it from this point here where I had put my trend line. The date up here is 16 June 2021. This analysis was saved on the 16th of June 2021. Today the date is 18 August. So today is 18 August. After this analysis, I'll show you where V10s is now and how or where we are expecting it to go now. Well, let's talk about this price action given here. As you can see here, we are given wave number 1, then wave number 2, which ended up in form of a penny, a triangle there, then wave number 3, then sideways complex correction. So this is daily time frame, remember, sideways complex correction, giving us wave number 4. Then we're given wave number 5. We're given wave number 5, and then from there it was now an ABC correction. This is simple basics of Elliott wave, guys. If you get 5 waves going up higher time frame wise, then we would expect the correction to then bring us to at least 0.618 or the 4th wave of the main trend, depending on the factors, characteristics, and price action given on the ground. So on this day here, I was expecting this to develop into a complex correction to come to these areas where it would have covered at least 61.8% of the whole move. So what we got here was an ABC correction, then an X wave there, which was also in form of what? Of a correction, which was in form of a triangle. I will just show you right away the lower time frame, because I also had a 4-hour price action there. Then from that point there, I was expecting it to then go down into these areas to give us another or the final wave before we can decide where we would expect it to go. So this is 4 hours time frame price action of what I was just showing you here. So let's look at this 4 hours time frame correction here. Already we were given this channel kind of a triangle where we're expecting to then go down in an impulsive manner, and the best way to trade this was either on break or on break and retest if you had missed this 1.168 of this correction here, because there's this first move, then this correction here, giving us a 1.618 there. But if it had been impulsively going up to this 1.618, it would have been a different story altogether. But because it was going up there in a corrective manner, accumulating, that is to say, remember about accumulation and distribution that happen in the market, those consolidations, so you give them the name. If it had been going impulsively, then we would expect the market to have power to keep on pushing up, but it was accumulating orders as it was going. It was trapping buys which were going to be slaughtered as we go down there. So this is analysis on the 16th of June. Let's just go to our price action chart and see where now this V10s is and how it has behaved. So here we are on the current price action, or the current prices that we have on V10s. What I was showing you in those other pictures was this 1, 2, 3, 4, 5 and the ABC correction, and this price action, I think we were around here, around this X wave. That's where we were at. Then from that X wave, what happened? Let's just concentrate on this. Since we have discussed what happened behind or back then, let's just focus our attention on this price action, all of it, and then discuss and see where we are expecting this V10s to go. Where are we expecting this 10s to now go? Well, we have from here we discussed this price action on that picture, where we had 1, 2, then 3, coming to 1.618, which was labeled somewhere around here. Then we said the best way to take the trade was upon the break of this line here. It was upon break of this line here, depending on the size of your account. That is, depending on the size of your account. That is to say, we should never ignore that. You need to consider your account size. Then another option to take the trade was on a break and retest. So this was the break and this was the retest. Let me just extend the line so that you see how it retraced. So that was the retest on this doji here. This is 4-hour time frame. On this doji here, if you go to lower time frames, you see beautiful patterns that you can trade. So on that doji right there, on that doji right there, that's where then we would would then expect us to then take the trade. But obviously we were not expecting this correction after this correction. So after that correction, obviously if you were planning to hold this long term, then it would have taken you out there on break even. Even after taking it to break even, then the best way to then take the trade again was either on break or a break and retest. So we are now going to where we were expecting to then go. If you check on that picture that I showed you, firstly, you see that we got to these areas. We got to these areas and it reacted in those areas. It reacted beautifully in those areas. So after reacting there, what happened? We got this inverse head and shoulder. By the way, I had not told you this. This pair also respects these head and shoulders and the inverse head and shoulders. Let's just look at this here. Let me show you something here. That's a head and shoulder there, right there. It's not as perfect as you would want to be. It's not a textbook. This is pure price action. So that's first number one, head and shoulder there. Then there is also this one here given here. I don't know if you are seeing that. That's another head and shoulder given right there. That's another head and shoulder given there. So you should not be afraid taking head and shoulders when it comes to this pair. Look at this mean head and shoulder given here. There you go. That's another one again. That's another one. It's not as pure as you would expect. It's not as pure as you would expect. Well, the market is like that. But trust me, the market is not full of chaos. It is always leaving us trails. It is always showing us something. It is not chaos. The markets are organized and they are not chaos. Look at that. Look at that. The markets are never chaos. So let's now talk about this here. What are we expecting now? What are we expecting now here? What are we expecting now? Well, from this reaction point, we got a strong impulse going upside. We got a strong impulse going upside. Then what happened? After that strong impulse going upside, they started creating a complex correction. Do you see that? They started creating a complex correction here, there. And what we're expecting now, or what we should expect now, is for them to come to either 0.786 or 61.8 retracement. They should come to 0.618 or 0.786 retracement. But already they have hit the 0.618 mark there. They reacted on it and they bought. They failed to break and they started correctively going down again, creating that complex. They reacted 1.618 there, but they failed to go up and break this previous high that had been set here. There was a previous high, remember, that had been set here as indicated with the yellow line. They failed to go up there impulsively. They went correctively expecting. So when you see them not going in a very strong manner, you would expect them to come back. So they came back there. Then now we are here. They took out the low, showing willingness to go down. But I'm not expecting them to pass through this. There are order blocks that I've marked here and beautifully marked. The other order block is confluence with what? 0.786. So should we expect them now? Should we buy this now? Well, it depends again with your account size. But if you have a very small account, let's say $100 account, you wouldn't want to buy this at this point here. You would want to wait and see how price is going to behave on this area, because number one, we have this trend line that you are seeing here. They didn't beautifully touch that inner trend line there. They are still just slightly above. Then number two, we have another trend line there that we are given. So they might just give you that short buy, then come back again to touch here where there is confluence of these two trend lines before they can go what? Upside. Those who trade BTMM, this will be what? Your W to go upside. Those who trade order blocks, this will be your what? Your order block breaker being created where you would expect to then what? Trade it at that point. It would then mean that this mitigation block given here will not hold water. You will then need to consider the rejection block just below these just below the closes of these candles. That is if this pair is going to respect what? Let's change the color there and put a purple. Yes, that is if they're going to respect these trend lines, then there will be confluence of the rejection block, this trend line and this trend line. Well, on touch of this, I would be tempted to take that trade because there are too many confluences on one place. But remembering that there might be stop hand. Okay. So that's option number one. What's the other option to take this buy trade that we're expecting? What's the other option to take this buy trade that we're expecting? The other thing to do is to wait for them. Wait for them to do what? Wait for them to go. As they go, they will do what? They will leave an order block here. And then you wait for them to trade into the order block so that you join the trade. You join the trend. You join the trend. Just like what they did here. They left this order block here. Then they came back to dip into the body of that order block before they could impulsively what? Go up. We can just expect that, well, yes, there is a what? A mitigatory block there that they came back to retest. That's none of our business. It's not for today. But that's what we have there. Thank you very much, ladies and gentlemen. Just remember to subscribe so that you keep on getting these beauties. Remember to subscribe so that you keep on getting these beauties. Just before I go, there is that marker that you see there. There is that marker that you see there. And there is another marker that you see there. This price action you are given here is very important when you consider. It is very important when you consider what to do with this price action that you are being given here. There is a lot to learn there. I just want you to go and study the two price actions. Those two price actions, then you write your views or you write what you are noticing in the comment section. Just study the two price actions. If you're a price action trader and you don't necessarily rely on indicators and this other MACD and whatever, you can just study this. There is tons of lessons to learn from just this price action where I've put a question mark and this price action that you are given here. Again, let me just cut the long story short. You just tell me what you have noticed or what you are learning from the comment section. For now, let's stop here. We have a peaceful week, ladies and gentlemen. Remember to hit that subscribe button. Don't forget to subscribe. Don't forget to tell a friend that there are these free signals. Don't forget to tell a friend that we have these free setups and these free discussions. They can as well join the Telegram channel and the WhatsApp group and like the Facebook page. You just search for Benko Forex Academy. You just search for Benko Forex Academy on Telegram. You can just follow the links that I've included in our description of the video below there. Just remember, don't forget to subscribe. I need your support so that we start posting those videos that relate to the Benko strategy, this hybrid that we use of Elliott wave and ICT to you guys so that you learn something from this beauty. Thank you very much. Have a peaceful week.